How are auto expenses deducted? Regardless of whether the company owns the vehicle and that vehicle sits on the balance sheet, or whether you own the vehicle personally, regardless of whether you pay for it with business or personal funds, you can only deduct the business use percentage of that vehicle. And that business use percentage is determined by the amount of business miles you drive as a percentage of the total miles you drive during that year. It's very important to keep track of the trips you're making for business and your total miles, because that percentage is very important to ensure that you're maximizing your auto expense deductibility. If you drove 4,000 miles for business and drove a total of 5,000 miles, that would mean that you drove 1,000 miles personally. So your deduction will be based on 80% business use of your vehicle. But if you drove 4,000 miles for business and your total miles were 15,000 for that year, well, that's only 27% business use, which could result in a very different deduction. It's super important to not only have records that show the miles that you drove, the nature of each trip, where you went and who you went to see and why it was ordinarily necessary for your business, but also, the first of every year, take a look at your odometer, because that's what you're going to use as your starting point for your total miles driven during the year. We often recommend that clients use an app like MileIQ as their mileage tracker. There are plenty of other ones out there too. Even QuickBooks has one integrated with their systems now. Whatever you use as a mileage tracker, it will keep track of every trip in the vehicle. And then you can use that information to determine whether the trips were business or personal. And if they were business trips, you can store some more information about each trip, should you need to reference your mileage log in the future. Regardless of the system you use, ensure that you maintain good records for your business and personal miles. It's also important to remember that commuting miles, so trips from your house to your office location, if you have one, are not business miles. Business miles are from your office location to visit a client, or from your office location to go deliver something to a vendor, or pick up items from a vendor. You're not allowed to deduct your commute because there's no deduction for W-2 employees that commute to work every day, even if they drive an hour and a half into the city. That 3-hour round trip is not deductible anywhere. It's just part of the job, so there's no deduction for driving from your house to your office location to do work. Keep that in mind when determining whether your trip was actually for business or not. So there are two ways to determine your auto deduction. You can take the higher of either the business use percentage of your actual expenses or the business mileage you drove multiplied by the current mileage rate for that year. So your actual auto expenses include your interest payments on the auto loan, any gas, electric bills if you have an electric vehicle, repairs, registration, auto insurance, and the mileage deduction is calculated by multiplying the business miles you drove by the applicable mileage rate that year. So whichever method, business miles or actual expenses, results in a higher tax deduction, you can use it as your auto expense deduction on your tax return. For most people, the mileage rate is more beneficial, but that depends on the actual cost of your auto expenses. If you have very high insurance or interest payments and high usage of your vehicle for business, mileage deduction might not be the best. But that's why it's important to keep good and accurate records of all your miles driven and your expenses paid for, so that you're able to maximize your deduction and reduce your taxable income by the highest amount possible. If you don't have good records for your mileage and how you're coming up with your mileage deduction, and you're just guessing that you drove about 1,000 or 2,000 miles every year, I can assure you this is a huge red flag. First of all, no one drives exactly 2,000 business miles every year, and if you're ever questioned about it, you're not going to have the records and the detail behind each trip to prove that they were actually ordinary and necessary trips for your business. So just be careful not to claim miles that you actually can't back up. If you found this video helpful, we're real accountants and CPAs who work with hundreds of small business owners just like you every day. Check us out at engagecpas.com to see if we're a good fit for your business. We also have business courses available to help small business owners understand their business. They're for you to learn about your financials, your taxes, how to pick the right entity, tax myths, and everything else about your business. Learn at your own pace. Check those courses out on the Education tab on our website. You can also find us on Instagram at Engage CPAs.